And fresh data from the National Bureau of Statistics shows Nigeria's inflation for the month of October rose by 0.36 basis points year-on-year to 11.61% and also increased month-on-month to 1.07% from 1.04%. The composite food index rose by 14.09% in October compared to 13.51% recorded in September due to increases in prices of meat, fish, vegetables, bread and cereals, potatoes, yam, and other tubers. Core inflation, which excludes the prices of volatile agricultural produce, eased to 8.88% year-on-year in October, compared with the 8.94% recorded in September. The urban inflation rate stood at 12.20% year-on-year in October from September's 11.78%, while rural inflation increased to 11.07% in October from 10.77% in September. On a month-on-month basis, the urban index rose to 1.15% in October from 1.13%, while the rural index was slightly higher at 0.99% from 0.96%. All right, let's head down now to Customs Street to get a sense of how the new trading week is going on, particularly with this inflation number released by the National Bureau of Statistics. Let's check in with Temple there. Hello, Temple. Good afternoon. Well, we saw the October inflation release this morning. Is the market in any way reacting to that data?
Well, the data has been digested by the markets and, of course, the traders and investors at large. But then I don't think the level of performance that we're seeing in the market right now actually speaks to the reaction that investors have towards the inflation data. I think right now, because again, the market is down some 0.63% right about now. And of course, if you look at the counters where investors had been very bullish for the greater part of last week, which is the banking stocks and a couple of major names there, the tier one names like Access Bank and FBN Holdings, those companies at this point in time are currently experiencing sell pressure. But then again, it is actually more of profit taking because you have some investors who are actually taking advantage of these stocks when their prices were really, really low. At this point in time, they've seen a very, very huge turnover on these particular stocks, and of course it gives them room to actually take profits at this point in time. For the greater part of last week, we saw strong buy sentiment. We saw huge volumes of transactions, in the market, and of course they were commensurate with the huge level of transactions that we saw by way of value now. So there's so much liquidity in the markets, again, because of what the CBN has actually pushed into the system. So the restriction of some local folks in from the OMO markets is what I'm talking about, and of course the TBS space. So you have the foreign investors, now spreading their funds, across board in the market. They're looking at OMO maturities. Some of them are also looking at equities. Also, you have those that have been restricted from OMO markets, from OMO auctions, are now looking the way of equities, while they also try to cherry pick on T-bills and bonds. Equities remains a major area where they are looking. If you look at our equity space right now, we have more than between 15 to 20% dividend yield for a lot of stocks that you have, especially the tier one names that you have in the market, even though they may not be so many. So that's the major attraction in the market at this point in time. If you look at interest rates, talking about the market rates now at the treasury bill side, and of course what is also beginning to happen to the bond space, they've now become single digits. So the markets, the equity space, stocks, is the area where you will be able to get more attractive dividend. The level of dividend that you will enjoy some months ago when you invest in treasury bills, it is in stocks that you now get to have that, because a lot of these stocks with fundamentals gets to pay out up to 15% of the dividend, possibly biannually and all of that. So why not look the way of equities? And that seemed to be the main thrust. So inflation or no inflation, whether it touches 12% eventually or even goes beyond that, equities remains the main area because there is really no major outlet for investors at this point in time. Some of the factors that they are also, pricing in at this point will be the fact that by January next year, the federal government is expected to, review its electricity tariff, and of course, so many other issues. But again, one of the other things they've priced in is the fact that for the greater part of this period for which the inflation report came out, that is October, for the greater part of October, we know that foreign exchange, Naira to the US dollar, was actually stable, 0.03%. So when you put all of this together, what the judgment should be for an average investor or analyst will be equity space. So I should say again that what we are seeing at this point in time is more of profit taking, which is expected, because again towards the end of trading on Friday, there was some huge volume that was expected, that was seen rather in the market, which brought about the turnaround that we saw on the key benchmark indices closing uptick on Friday. So today, for those that couldn't take profit at the tail end of trading on that Friday, Monday when the market reopens, what you expect is that profits taken, which is what we're saying at this point in time. But moving on for this week, we do expect the level of transactions that we've been seeing in recent times, there's a huge level of demand to also continue, especially on major names, as we continue to see analysts now revising their projections for some stocks like Dangote Cement, like Nigerian breweries, like Seplat, which even pumped in some, which reduced or had a bit of reduction in its oil production in Q3 2019. So all of these analysts are reviewing their positions, their projections for these companies, and we do know that investors will take advantage of all of these numbers at the end of the day, Chimeze.
All right, Temple, well, I can say the week has just started, and just as you said, profit taking, and the optimism there is about the dividend yield that investors are looking at, particularly on the banking sector.
Yeah.
Anyway, let's just hope for a good week for the equities market. And moving on now, a survey by Bloomberg shows that South Africa could move deeper into junk territory as the nation looks set to lose the only stable outlook on its credit ratings this week. Of the 22 economies in the survey, 16 expect S&P Global Ratings to change its outlook on the country's credit rating to negative on Friday. That means the next move from the company, which already assesses South Africa's foreign currency debt at 2 levels below investment grade, could be a further downgrade. This follows after Moody's Investor Services, which still assesses South Africa as investment grade, changed the outlook on its rating to negative 2 weeks ago after Finance Minister Tito Mboweni described a rapidly deteriorating fiscal outlook due to billions of dollars in bailouts for cash-strapped power producer Eskom Holdings in his medium-term budget statement. And finally, the International Monetary Fund and Democratic Republic of Congo's government have agreed on Friday to a financial assistance package that would allow the IMF to resume lending to Congo for the first time since 2012. The IMF suspended its last aid to Congo, a loan program worth more than $500 million after the government failed to provide sufficient details on the sale of state mining assets to an offshore company. And that's a wrap on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.